Today, we're talking about investing. If you want to protect your money from inflation and build future wealth, then you have to learn how to invest. But here's the thing, you might think you need a lot of this to get started. And yes, I'm using Monopoly money because I'm not rich enough from YouTube. So today, we are swapping this for this. And instead of you listening to me talk about how to invest £5 in the stock market, I actually conducted a real-life experiment with real-life market conditions where I invested £5 every day using the Trading 212 app so that you can benefit from seeing how it's done and get a realistic view of what results to expect. It all started on the 16th of April 2025. At the time, I decided to start an experiment and invest £5, which is the price of a coffee, every day for an entire month. Now, to do this, I used the Trading 212 app. And just for clarity, I'm not sponsored by Trading 212, it just happens to be the app that I personally use for my investments. Right, now let's talk about investment funds. In here, I just kept things simple and went for one index fund instead of me actively picking companies to invest in. And the fund I chose for this experiment is the almighty S&P 500. This is one of the most established funds on the planet. And in case you're not familiar with the S&P 500, it's a fund that combines the top 500 American companies all in one pot. And by investing in this pot, you get a piece of each of these companies. And the beautiful thing about this is that this list is constantly reviewed. And every quarter, the worst performing companies are removed, which gives room to new, well-performing companies to be added. In other words, my friend, you don't have to go through the headache of deciding what companies to pick and reading balance sheets and income statements and so on. Great, now that we know this, let's go over to Trading 212 and set this up. Right, here we are. Now, before you do anything, make sure that you are in the correct account. Trading 212 has three types of investing accounts. So you've got your stocks and shares ISA, your CFDs, and a general investment account. I'm going to ignore CFDs for now because that's an entirely different word of investing and I'm not going to tackle it in this video. So we are left with stocks and shares ISA and a general investment account. And these two accounts are pretty much identical. The only difference is that the stocks and shares ISA is shielded from tax. And who doesn't want that? If you're in the UK, then you can invest up to £20,000 per year completely tax-free in an ISA, which is fantastic news to a lot of us. Anyway, once you choose the right account, you will land on this homepage. From here, you can click on this pie icon here, and that will show you your stocks and shares ISA portfolio. Then scroll down to the bottom until you see this Add New Pie button, and this is where you can customize your pie. So click on Custom, then Add Instrument, and then here we're looking for the Vanguard S&P 500 option. Now within Trading 212, there are many S&P 500 options, as you can see from this list here. I'm not going to go into the details of the difference between each one of them because I already covered that in depth in a separate video, which I will link in the description if you'd like to check it out. So with that said, I'm going to pick the first Vanguard S&P 500 option, then click Add to Pie, and then hit the next arrow. And then here, I'm going to use Autoinvest. And this is a great feature because number one, I'm investing every day for this experiment. So it's very easy for me to have the odd days where I forget to invest my £5. And then the second reason, and this applies beyond just this experiment, is that unfortunately, as humans, we suck. And we suck because oftentimes when it comes to making financial decisions, such as investing, we tend to use our emotions rather than the rational mind. And Autoinvest solves that problem. If you tell it to invest £5 a day, it will do it. If you tell it to invest £10 a month, it will do it, regardless of how you feel. So, moral of the story, use automation whenever you can. Anyways, now that I've got the pie sorted, we're pretty much good to go. And all I have to do is wait for the month to go by. But lucky for you, my friend, you don't have to wait because the month has already gone by and now I have the results in hand. But wait, I have a surprise for you, which I didn't tell you about at the start, but I actually did a secret second experiment alongside my £5 a day experiment. And I've got the results for that one as well. But before we talk about this mysterious second experiment, let's first have a look at investing £5 a day every day for an entire month. Now, the total amount invested for this experiment is £5 times 30, which is £150. And on the 16th of May 2025, which is exactly 1 month after starting this, the value of my portfolio is £160, which is a gain of just over £10. For the length of this experiment, this result is actually not bad. In percentage terms, this would be just a little under 7% return, which is great for just 30 days. Just a quick one, at the time of recording this video, this giant channel is proudly standing at 70 subscribers. And listen, I genuinely appreciate every single one of you. And if you are already part of this small crew, then thank you so much. And I would love to see this small community grow even more. So if you are enjoying the video so far, hitting that subscribe button would honestly mean a lot. And it would certainly help me with making even more videos, just like this one. So thank you so much in advance. Moving on. Now, let's talk about this mysterious second experiment. On the 16th of April 2025, I actually created 2 pies in Trading 212. The first pie is the one that we used for the first experiment, and the second pie is actually an exact copy of the first pie. It has the same index fund, it was started on the same day, and it ran for an entire month as well. The only difference is that with this one, rather than investing £5 every day for 30 days, which totals to £150, I've actually invested the entire £150 all in one go from day one. And the goal of doing this was to keep everything the same and only assess the results difference between investing the £150 all in one go and investing it in small increments of £5 every day. This is also what's known as lump sum investing versus dollar cost averaging. And the goal of the dollar cost averaging technique is that you spread out your investments over time so that you reduce your exposure to volatility, rather than investing the entire amount in one go and seeing it fluctuate and go up and down with the market. Right, let's have a look at the results of the second experiment and then compare them with the first one. Now, as we know, the total amount invested is again £150. And on the 16th of May 2025, which is exactly 1 month after starting this, the value of my portfolio is £165, which is a gain of just over £15 or a return of 10%. Again, these are really good results given that we only did this for 1 month. Now, let's do a side-by-side comparison. So for both the first and second experiment, the total amount invested is £150. And after 1 month, the value of the portfolio is £160 for the first experiment and then £165 for the second experiment, which means that the gain from the first experiment is £10 and the gain from the second experiment is £15. So about 33% more, which is not surprising given that the S&P 500 has done quite well this month. However, it's worth noting that at times when things are the other way around, and let's say that the S&P 500 is tumbling down quite badly like it did a few months ago, if we were to have done this experiment at that time, we would see that the second experiment would have returned less gains than the first one. And this is mainly because the more money you have invested while the market is going down, the bigger the impact you will feel. And equally on the other hand, the more you have invested while the market is going up, the more gains you will see. And if you want the best of both worlds, then dollar cost averaging is your best friend. So just be wary of both situations. But wait, I have more, because I've done yet another experiment, but this time with bigger sums of money. So if you want to check out the results of me investing £20,000 in Trading 212, then you can click on this video next. Okay, I'll see you over there.